There we go. Welcome to Coffee with Marcus and Mark. Today, just Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we are trading them. Today is Wednesday, December 4th, and here's a look at the markets. Stocks see a quiet start to December. Private payrolls come in lower than expected this morning. Salesforce and Marvell Tech soar after earnings. Chewy gets hammered. Powell speaks this afternoon. And we'll look at a stock that jumped 270% yesterday and discuss why. Plus, we'll look at our open positions and also check out the Rockwell holiday calendar. You don't want to miss out on that. As you can see, there's a lot to talk about, so let's go ahead and get started. If this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading, and let's go ahead and jump to the charts, see what's going on in these crazy markets. And here we have the S&P 500. The S&P 500 is higher. The Dow also higher. Dow up by 0.4%. The NASDAQ up 1%, making new highs. If we look at a 5-minute chart, we see that we jumped and continued to rally throughout the session. Now let's go to the E-mini S&P in a 5-minute chart here. We see that overnight we were drifting higher, and we made some session highs here before U.S. markets open, seeing a little volatility here after markets open. Now we did have a report at 8:30 and a little bit of indecision and choppiness there as investors are trying to figure out what to make of this 8:30 report. If we go to PowerX Optimizer and look at the economic calendar, we'll see that this morning we did have the ADP non-farm employment change report. Here, 146,000 private payroll jobs are added. This was lower than what was expected. 152,000 were forecasted, and this is also lower than the 184,000 added last month. So a little bit of a jump here between what we saw yesterday with JOLTS job openings being higher than expected, private payrolls now with jobs being added being lower than expected. We'll see what happens. We have the weekly unemployment claims tomorrow, an hour before U.S. markets open, but we always know that the monthly jobs report, the biggie, is the first Friday of the month, and this is where we'll get average hourly earnings, non-farm employment numbers, and the unemployment rate. So this was just the ADP number, which sometimes is a prelude to what might come on Friday, but there isn't a perfect correlation. You would think that it's more correlated than it actually is. And we also know that Friday's the big. That's the one that investors are really keeping an eye on. While we're here, we also had ISM Services PMI being reported. This coming in lower than expected, still in expansion territory. Reading above 50 is expansion, reading below 50 would be contraction. Crude oil inventories coming in lower than expected. And then this afternoon, Fed Chair Powell speaks at 1:45 p.m. Eastern time. So this is something that could always move the market. You never know if he's going to say something that catches investors off guard. You never know. Most likely not, but it's a red flag report because it is significant. And like we see here, the biggie this week is going to be coming on Friday. Now, we did see some earnings, although earnings season and a bulk of the companies have reported, and we're just seeing the tail end here. There were some movers today. Yesterday, Salesforce reported after the bell. Marvell Tech also reported after the bell. We'll take a look at those two. This morning, Dollar Tree and Chewy making headlines, as well as Foot Locker. So we'll look at those. After the bell today, we have Five Below, a couple of other names. Kroger before the bell tomorrow morning. Dollar General also before the bell tomorrow morning. So there are a couple of individual names that could potentially move. Let's go ahead and jump back to a daily chart and first take a look at Salesforce. CRM is the ticker symbol. Look at Salesforce go. Huge jump here, up 8.5%. Now, this comes after worse than expected earnings, but better than expected revenue. And Salesforce, we see with some of the AI hype, it's being maintained as a buy by many of these analysts who are covering it. The company expects its fiscal 2025 revenue to be between 37.8 billion and 38 billion. So maybe a little bit better than expected. They said that our complete AI system for enterprises built into the Salesforce platform is at the heart of a groundbreaking transition. So let's see where we go from here. But investors definitely liking what they had to hear in spite of the earnings miss. Salesforce jumping on that earnings report. Another company moving because of the AI hype and better than expected earnings would be Marvell Technology. And the ticker symbol there is MRVL. Marvell Technology up 21.4%. Now, Marvell saw an earnings beat and also a revenue beat. They jumped to record highs because of their optimism, boosted by investor confidence in AI-linked stocks. Here we see that just a great reaction. Morningstar analyst saying that Marvell is capitalizing on a massive artificial intelligence chip opportunity with a burgeoning custom accelerator portfolio and a dominant optical chip position. The CEO said we are seeing strong custom AI demand continue into the fourth quarter and have secured supply chain capacity. So investors liking what Marvell had to say. And look at this, quite a day, up 21%, just a huge move for MRVL. Now, a not so nice move would be Foot Locker. FL is the ticker symbol, coming off of session lows, still down just shy of 10%. Gosh, at the open, this was down 17%, as low as 20%. So this is a pretty significant comeback, even though it's still getting hammered. Miss on earnings, miss on revenue. They cut their full year guidance and also sales expectations. They said that this was really due to softer demand outside of key selling periods. So outside of some, big sales pushes, maybe back to school or Black Friday and whatnot, really slow demand for Foot Locker, slow sales leading to those cuts, and investors not liking this at all. 10% is still significant, but definitely coming off of those lows. Early on today, it was trading at levels not seen since the fall of 2023. Right now, it's at levels that we haven't seen since May, and getting back to these lows that we had early November. Still a rough day for Foot Locker. Chewy, the brand I love to hate. I have nothing against Chewy. I just don't want to own shares. So Chewy down 8.7%. And this is where Chewy also had an earnings miss. Now, they did see a revenue beat. Investors, though, not happy with this earnings report, down 8.7%. Let's move on. Let's take a look at PowerX Optimizer, go to the WTF strategy, and got out of that nice Broadcom trade yesterday. No new signals, no open positions. Things are a little quiet on the WTF side, which is expected because the goal here with this strategy is to identify a high probability opportunity where we are in position to win the fear, be a buyer, step in when others are fearful, take advantage of that fear and see a quick rally. Nothing fear-oriented, at least with the major indices that we like to track with this strategy. No new trades there. Now, if we look at some open positions, BP off to a decent start today, but pulling back, unfortunately, trading at 29.33, down 0.4%. got as high as 29.74 today and is now pulling back. I was looking for this to continue to move higher. Looks like we have this range between 29 and almost 30, and traders trying to find some direction. CSIQ back and forth, up and down, all around, and this is to be expected because CSIQ does report earnings tomorrow. So tomorrow before the bell, CSIQ will report. Looks like there's a tiny bit of selling, but down 2%. CSIQ, that's a normal day. Walk in the park for CSIQ, no big deal, down 2% when this thing can be up 10% in a day. It's just a crazy one. Looking for positive reaction to tomorrow's earnings. If we look at Halliburton also pulling back here, and this is where we had this nice uptrend, a little bit steep on that move higher, pulling back, getting down to 31, which could act as a support level. It's kind of at these highs that we had before the break to the upside, getting up to 32.50. And let's see where we go here. It was started just slightly lower, but has fallen during the session. Coal's not a trade that I'm in, also just kind of choppy, down a little bit today. Now, Merck started higher, pulled back, and is now pretty much flat. HSBC did upgrade Merck, and I'm not in Merck, but hoping that for those who are in Merck, that this would help with a little bit of upside on this one, but not so much the case so far anyway. UPS also having a bit of a rough couple of days. I didn't see what led to this big decline yesterday, down 3%. A little continuation here as we pull back into this range. I've said it before, this trades in these really nice ranges. I would hope that this snaps back into this upper range that's like 130 to 136, 138. Right now trading at 128.26. We'll see where we go here. So still looking for some opportunities in the market. I didn't see anything today with the overall market being higher. We could take a look at the heat map, see where these gains are distributed. And once again, the big names really driving this push higher in the major indices because of their weighting. There is a decent amount of red when we look at this S&P 500 as a whole, but being buoyed up for the trading day when NVIDIA is up 1.7%, Microsoft is up 1.8%, Google is up 1.6%, Apple is up 0.3%, Amazon up 2.7%, Tesla up 0.4%, Meta, the only member of the Magnificent Seven that's down today, down 0.9%, but that's easily made up for by these nice gains in the other six. Now, if we look at where the red is, financial services down a little bit today, energy down today. We could take a look at crude oil. Crude oil down 0.4%, and if we look at a 5-minute chart, it looks like we started to fall before crude inventories and then chopped around, and now we're back near session lows there. The VIX, the fear index, is falling. It's at lows that we haven't seen since, well, there was a blip in January where we got to those lows. And yeah, well, I take it back. We were trading around these levels in not January, July. So fear has left the building, and we see that volatility is decreasing. 1, 2, 3, 4, 5, 6, 7, 8, 9, 8 out of 9 sessions right now with a decrease in volatility. The VIX tracks the S&P 500 option premium for traders that aren't familiar with the index. And so as options premium increases, this would be because investors and traders believe that there will be greater likelihood that prices will move, right? And it could be to the upside, it could be to the downside. But typically when there is fear, investors will pay more for options or expect more if they're selling options because of the greater likelihood that prices will move and expand, and volatility expands. So typically when markets are falling, there's more fear. When markets are just drifting higher, making highs but not moving a whole lot, that's when the VIX and those options premiums are dropping. So low VIX, low fear in the market. While we're here, I haven't looked at Bitcoin for a little bit. Okay, so after the big moves that we saw, just kind of consolidating and not moving a whole lot as well. 10-year yield up today, but pulling back from these highs that we saw mid-November. All right. Well, it's that time of day. And again, I know that the quality of the dad jokes does, Marcus being gone and the quality of the joke tends to have an inverse correlation there, where the joke gets worse when Marcus is gone. The joke gets better when Marcus is there. I think it's because little competition never hurt nobody. And Marcus will be back tomorrow. So I apologize for today's, but some might say that I have the heart of a lion. That may or may not be true, but what I do know is that I have a lifetime ban at the zoo. Hope you got a little chuckle out of that one. No lions were hurt in the making of that joke. I also wanted to pop over to our Rockwell holiday calendar. If you haven't joined already, rockwelltrading.com/holiday is going to give you access to our December 25 days of Christmas. It's just a lot of fun. When you are part of it and you sign up, you could go back to the previous days. Here, there's information on how to join the group so you can share in some of that holiday and Christmas spirit. On the second day of December, we had our Santa hat or holiday outfit for your pet and some fun pictures shared in the group there. Yesterday, we gave away the Financial Fortress audiobook, so you can take a peek there, get that. And today, let me refresh this. So we have something to avail each day. Sometimes it's just sharing in the spirit, having fun. Sometimes it's some free stuff or discounts. Here we go. Here's just a fun day. Share your favorite Christmas movie. Who doesn't love a good Christmas movie with so many great ones? We'd love to hear which one you like best. Share your favorite Christmas movie in 25 days of Christmas. Let me find this. Here we go. So a post, Home Alone. Okay, that's always a good one. It's a Wonderful Life. Okay, that's a classic. Here's a few other posts in sharing. Pet post. Anyway, The Year Without a Santa Claus. Okay, that's a classic. Love Actually. This is a good one. All right. Well, we're having a lot of fun with this, and I hope you are joining as well. It's free to join. And again, it's rockwelltrading.com/holiday. We'll get you set up, and you'll get an email with something to do or a gift or just a little bonus for our 25 days of Christmas. And I hope you choose to participate. With that said, hope you had a great trading day. I hope you liked this video. If you appreciate these videos and you like this one, please give it a thumbs up. If you're new to the channel, please subscribe. And if you know someone who could benefit from these videos, or just someone who might enjoy being part of the 25 days of Christmas, please share this video and feel free to share the link, rockwelltrading.com/holiday. I'm going to be back here tomorrow with Marcus. Until then, happy trading, everybody.